All right, folks, in this video, I'm reviewing the Fundrise real estate investment platform. Back in December 2017, actually it was in my wife's name. My wife invested $500 into a Fundrise Starter Portfolio. I'm going to tell you how this investment has performed, what it's worth now, how it compares to investment benchmarks such as the S&P 500, as well as publicly traded real estate ETFs. If you don't know what the S&P 500 is or what ETFs are, please watch my Investing for Beginners video, link at the top of the screen. I'm also going to tell you my overall impression of the Fundrise platform in this video, and finally at the end of the video, I'm going to go over the pros and cons of Fundrise. If after you watch this whole video, you understand the pros and cons, if you are still interested in Fundrise, I'd be very appreciative if you use my Fundrise link in the description below to create an account at Fundrise. If you do that, the channel will get a commission. I'll be very thankful. This is no extra cost or effort to you other than to simply use my link to sign up. All right, before we get into the performance of my wife's $500 Fundrise investment after over 3 years having invested in Fundrise, let's talk about what Fundrise is. So Fundrise is an online real estate investment company that lets investors like you, whether you're accredited or not, invest in what Fundrise calls institutional grade real estate, such as, and these are actual investments in our Fundrise portfolio, a rental home community near Dallas, an apartment renovation in Northern Virginia, a commercial redevelopment in South Los Angeles, et cetera, et cetera, et cetera. That being said, don't fall prey to novelty bias when it comes to investing. Just because an investment or an investment platform is new and sparkly, or if it's new to you, that doesn't mean that it's better or that it's necessarily going to make you more money. Okay, so how does Fundrise structure these deals? Well, as far as their starter portfolio is concerned, which is what I'm familiar with because that's what we invested with, you're investing in multiple eREITs, E as in electronic and REITs as in real estate investment trusts. This probably warrants a dedicated video at some point in the future, but a REIT, a real estate investment trust, is basically a company that invests in real estate and gets tax advantages if they pay out at least 90% of their taxable income to their shareholders and dividends. And keep in mind that dividends from a REIT, the vast majority are non-qualified dividends that are taxed at your normal, regular income tax rates, not the special lower tax rates for qualified dividends and long-term capital gains. Make sure you watch my video on how dividends are taxed for more information on that. But anyway, back to my point about Fundrise being a REIT. There are actually many publicly traded REITs that you can buy in any brokerage app right now. Okay. By the way, make sure you watch my video on all the places you can get free stocks. Link at the top of the screen. But with Fundrise, we're talking about a non-traded REIT. Okay. Fundrise calls their non-traded REITs eREITs. That's not a technical term. That's just what Fundrise brands their REITs as to sound cool and futuristic and communicate to you by the name that now you can invest in real estate for the comfort of your own home, which you could do anyway with normal traded REITs. Right? And with the normal everyday traded REITs, you can buy and sell in your brokerage app, right? You can exit at any time, just sell your shares. But with Fundrise, your investment is not nearly as liquid. Okay. So what's then the benefit of Fundrise versus the normal old publicly traded REITs? Well, I'll talk about performance in a minute, but look, in my opinion, here's the true Fundrise differentiator. Okay. Is that even though with Fundrise, you own shares in a REIT or multiple REITs, right? Which are, you own stocks. Fundrise makes you feel like a real estate investor, not a stock investor. And frankly, having spoken to many newbie investors over the years, or at least new real estate investors, that's what many people want, right? They haven't developed some master portfolio education and said, oh, I want to be 10.4% in real estate, 60.7% in equities, et cetera, et cetera. No. For many new real estate investors who are the ones Fundrise is targeting with their starter portfolio, with its low $500 minimum investment, for many new real estate investors, it's not so much about having, an exactly properly allocated portfolio, as much as it is they wake up one day and they get this idea that they should invest in real estate. They think to themselves, you know what? All my investments are in the stock market. I need to diversify into real estate. Often not aware that it's very likely they are already exposed to real estate to some degree through their stock portfolio, through publicly traded REITs. But they don't see it that way because it's like, oh, well, that's stocks. I want to invest in real estate. And because they often don't have enough money to buy a rental property or something like that, they stumble on a platform like Fundrise, and Fundrise is capitalizing on this market. So, look, you create your account in Fundrise, and I'll be honest, the platform is beautiful. You log in and what do you see? You see the latest updates about your real estate portfolio. For example, new acquisition, rental home community near Dallas, Texas. This investment fits into our broader strategy to invest in affordably priced rental housing across the Sun Belt. And you can click on this and you can see this whole write-up about Crest Ridge Meadows. 98 homes being built in the greater Dallas-Fort Worth area. And it's got this investment strategy here. It's got this sleek box here describing the risk-return profile, the timing, the business plan, the reasons they invested. It says there's a growing local economy and it's social distancing friendly and it's an institutional quality asset. And you can even see the map of the planned development. And you can do this with all the investments that you're invested in through Fundrise. And this really makes people feel like they're a part of the deal, right? Like they're a real estate investor. Even though the REITs that they can invest in through their brokerage app are doing the same types of things. But if you go to, say, Realty Income's website, this is a big publicly traded REIT, pays a monthly dividend. You might get some general information about the company and maybe some press releases, but you're not getting this level of detail that Fundrise provides on a deal-by-deal basis. So the question becomes, of course, okay, how much of this is just marketing and a sleek platform to get people to invest versus how much is this really valuable to the end user, right? And there are a few ways to approach this question. You could be a cynic and say,
Fundrise is a sham. It's just forcing people to lock up their money just so they can feel like real estate investors, even though they could, for all intents and purposes, invest in the same kind of thing with any publicly traded REIT. And it's not nearly as liquid as a publicly traded REIT.
But my counter argument to that is, well, if Fundrise encourages people to invest, because they do have this slick platform, and they tell their investors about, in detail about the investments they're in, that their money's going into, and it gets them excited about investing, is that a good thing? Is that a good thing if it encouraged them, take the $500 they have saved and invested, rather than taking it and blowing it on some gadget that's going to be outdated in less than a year or something else they really don't need? So it's kind of like the Acorns app. If you've seen my review of the Acorns app, this is similar to my sentiments on Acorns, right? If paying Acorns' small monthly fee is what's going to get you excited about investing and to start investing, I'm all for that. Same thing with Fundrise here. But of course, there's another aspect here, which is what about the returns? Because look, people get excited every day about the latest penny stock they heard about from their barber or something, and then they invest in it, and they lose most, if not all, of their investment. So it can't all just be woo-woo, right? It can't all just be, it gets you excited about investing, and that's legit. There's also discussion we have to have about performance. How has this thing performed historically? I know that historically I'm not going back very far. I'm only going back to December 2017 when we dropped $500 into Fundrise. So now we get to the fun part. How did this Fundrise investment perform? What is that $500 worth today in late February 2021? Ready? Drumroll, please. $646.28. That's the initial $500 investment, plus $101.75 from dividends, plus $46.75 from capital appreciation, less $2.21 in advisory fees. So total return on Fundrise investment over the past a little over 3 years is about 29%. That's not bad. Annualized, that's about 8.4%, so that's not bad. But what about the S&P 500? What about one of my favorite Vanguard index funds, VOO, the Vanguard S&P 500 ETF? If we had invested $500 in VOO on December 30th, 2017, how much would we have today? Now, you might be tempted to just look at today's stock price of VOO and compare it to the stock price on December 30th, 2017, but that wouldn't tell you the whole story, because that would not include reinvested dividends. Fundrise reinvests the dividends received into the Fundrise investment. So to do a true apples-to-apples comparison here, we have to compare the total return of VOO, okay, including reinvested dividends, assuming a $500 investment was made on December 30th, 2017. And the closest thing I could find to this is this calculator on dqydj.com. It's not the best calculator. I couldn't do today's date. The latest it would let me do is February 16th, which is kind of a while ago. But basically, if you had invested $500 in VOO on January 2nd, 2018, which was the first trading day after December 30th, 2017, because December 30th was a Saturday and Monday was New Year's Day. So if you'd invested $500 in VOO on January 2nd, 2018, and reinvested all dividends, that investment would be worth $776.04 on February 16, 2021, which was the last day this calculator let me do it. Right? I know it's a while ago, but that was the deal. This is an average annual return of 15.1%. So comparing these two investments, Fundrise Starter Portfolio and VOO, saying you put $500 in each on the same day, your VOO investment would be worth about $130 more today, right? Just over the time period I'm talking about, right? And that makes sense. The stock market has been on a tear recently. I don't want to say it will always be this way, that the S&P 500 will always outperform the Fundrise Starter Portfolio. That's not my point. My point is that sometimes, as in this particular scenario, a good old-fashioned S&P 500 index fund might do you better than some newfangled investment product. Now, I know what you're thinking. You're thinking, Logan, well, that's not really fair. It's not fair for you to compare a real estate investment to an S&P 500 index fund that is heavily weighted toward high-flying tech stocks like Apple, Amazon, and now Tesla, right? That was in a booming bull market for the vast majority of the time period in question here, right? And I would say, look, you're right? If you're somebody who already has a diversified stock portfolio and you simply want to gain some exposure to real estate, this is an apples-to-apples comparison. In that case, of course, I'm comparing two different asset classes here. But if you're just somebody who has $500 to invest and you're just looking to invest in something to put your money to work for you, well, I might lean towards starting with investing in an S&P 500 ETF like VOO, right? That could possibly be a better investment for you in the long run, right? That said, valuations of certain tech stocks are very high right now. Is the stock market due for a big correction sometime soon? I certainly think we could see that. And at that point, sure, maybe Fundrise will outperform the S&P 500 over time, right? Maybe for a year or something. But over decades and decades, though, I'm not so convinced. But really, this is all speculation at this point because no one knows the future. However, to be fair, let's look at Fundrise's performance versus that of various REIT ETFs. And I was actually surprised by this. Would you believe it? My performance in Fundrise beat the performance of if I would have dropped $500 into some of the largest real estate ETFs on the same day, including the Vanguard Real Estate Index Fund ETF, the iShares US Real Estate ETF, the Schwab US REIT ETF, and more. I ran all these other real estate ETFs through the DQYDJ calculator, and the annualized return for Fundrise was higher than for all the rest. So what am I saying? I'm saying, look, at least in the very brief time span I'm examining here, Fundrise seems like a decent investment as far as real estate securities and REITs are concerned. Of course, unlike these ETFs I'm comparing Fundrise to, Fundrise is not nearly as liquid. In fact, Fundrise makes it pretty complicated to withdraw funds from your Fundrise account. Here's what they say on their website about taking money out of Fundrise. To withdraw funds from your account, you will have to request to redeem your shares from the settings section of your dashboard. During the request process, you'll find information about the expected timeline and totals. Keep in mind that any eREIT or eFund shares that you've held for less than 5 years may be subject to a penalty. After you submit your request, you can follow along with the status of your redemption request on the transactions page of your dashboard. So this isn't raising any red flags necessarily. It's actually quite common when it comes to non-publicly traded real estate investments, right? You know, it's kind of not liquid. You got to lock it up for some time. But it just goes to show how illiquid a Fundrise investment is, especially compared to an ETF, you know, that you can sell on Monday and have the funds in your bank account later that week. All right, now let's talk about fees, Fundrise fees. So Fundrise charges two fees. One is the asset management fee on the REITs. This is an annual 0.85% fee on all REITs. And about this fee, Fundrise says this money goes toward the ongoing operating expenses of the 100 plus real estate projects in our investor portfolios. These expenses can come in the form of things like project-specific accounting, zoning, and construction. So you won't see the 0.85% annual asset management fee charged against your account on your account page because it's a REIT level fee. Kind of like the expense ratio for an ETF. It's already baked into the value of your shares. So if you look at my wife's Fundrise portfolio here, these all-time dividends, all-time appreciation, right? These have, in a sense, already been reduced by the 0.85 annual asset management fee because it's at the REIT level. It's baked into these amounts at the REIT level, and it's baked into your returns. You don't see it as a separate line item here. And 0.85%, that's not extravagant or anything like that. Then there is the 0.15% annual account level advisory fee that you do see reflected in your account balance. If you look at Caroline's account, you see all-time advisory fees, $2.21. That basically makes sense. You know, we invested $500. 0.15% times $500 is 75 cents. Times 3, because we've been in Fundrise for about 3 years, that's $2.25, which is almost right on the nose of the $2.21 showing in the account. Now, here's the part that kind of ruffled my feathers a little bit. And it's not because the advisory fee is super high. It's really not high. The thing that ruffles my feathers is how Fundrise, in this article called Everything You've Ever Wanted to Know About Fundrise's Fees, kind of dogs on Vanguard's fees. They say Fundrise charges investors a small fee for our unaccredited investor offerings, 0.15%, and annual advisory fees to be exact. This means that over a 12-month period, you will pay a $1.50 advisory fee for every $1,000 you've invested with us. For the sake of comparison, Vanguard's famously low advisor fee is 0.3%. And then later on, they say, our obsession with doing everything ourselves rather than relying on a bloated list of third-party service providers necessitates that we charge the annual advisory fee, but it's also the main reason why our annual advisory fee is so low. Even Vanguard's fee is twice as large, an amount they refer to as an incredibly low cost for a service. Now, there are a few things unfair with this, in my opinion. First of all, it's a different level of service. It's apples to oranges. So just so you're aware, so there's no confusion, you can invest in Vanguard funds, index funds, ETFs at Vanguard, or just in Vanguard ETFs at any brokerage account, and not pay the 0.3% advisory fee. However, if you want to sit down or have a call with a Vanguard financial advisor who will talk to you, discuss your goals, and rebalance your portfolio quarterly, you can sign up for Vanguard Personal Advisor Services and pay a 0.3% advisory fee. Is this a high level of financial service? No, it's not. And it's probably something that can be approximated by a robo-advisor these days. But still, this is personal service, one-on-one service. It's in the name, Personal Advisor Services. And that's what you would be paying the 0.3% annual fee if you wanted to, right? So if you have $100,000 of Vanguard, you would pay $300 a year for this. Now, for Fundrise's 0.15% fee, do you get any kind of this personal services? A phone call, someone looking at your specific situation on a quarterly basis? No, you don't. It's apples to oranges. So for Fundrise to say,
our advisory fee is half what Vanguard's is, even though Vanguard refers to those as an incredibly low cost for service, ours, Fundrise, is actually cheaper.
But they're not providing a personal service here. It's just another administrative fee for Fundrise. So that's kind of one thing that rubs me the wrong way. The other thing that rubs me the wrong way here is that if you invest in Fundrise as a non-accredited investor, you can't escape the 0.15% advisory fee or the 0.85% asset management fee. You're going to be paying 1% of your asset value, period. With Vanguard, you can choose to not use their personal advisory services and just invest in their ETFs and or index funds, and your expense ratio will be something like 0.1% on average. And similar to the Fundrise management fee, this fee does not hit your account directly, but is baked into the share price of the security you own. And you can pay for the personal advisor services for 0.3% a year, making your total fees with Vanguard, even with the personal advisor services, which I don't use, by the way, 0.4%-ish, right? Which is 60% less than Fundrise's fees. So what's my point? Are Fundrise's fees outrageous? No, not by a long shot. But the way they present their fees in this article, trying to make themselves sound like fee-wise they're less expensive than Vanguard, no, that's not true, not by a long shot. Okay, so just keep that in mind. The fees are not high, but Vanguard is cheaper. Index funds and ETFs are a cheaper way to invest, and they may very well outperform Fundrise in the long run, as discussed previously. All right, so let's sum up now Fundrise pros and cons. Pro number one, Fundrise has a sleek investment platform that keeps you very updated on the real estate projects that the REITs you own shares in are investing in at any given time. They do this much better than publicly traded REITs. Pro number two, low minimum investment. Like I said, you can start investing in Fundrise's starter portfolio with only $500. And if you're interested in learning more about Fundrise, I'd really appreciate it if you use my link in the description below. No extra cost to you. Supports the channel. Pro number three, you don't have to be an accredited investor to invest in Fundrise. Many non-publicly traded real estate deals and platforms, you have to be an accredited investor to invest in them, meaning you must have an annual income in excess of $200,000, $300,000 for joint income for the past 2 years with the expectation of the same or higher income in the current year, or you have to have a net worth exceeding $1 million, okay, either individually or with your spouse, excluding the value of your primary residence. Fundrise does not have these requirements, at least for many of its investment opportunities, including the starter portfolio. Fundrise does have investments that are only open to accredited investors, but the majority of its investments are accessible to non-accredited investors as well. All you need is the minimum $500 to get started. Pro number four, at least based on the investments that appear in my wife's portfolio, Fundrise does do a decent job of investing your money in different geographies and different asset classes. It's not all, West Coast. It's not all East Coast. It's not all Midwest. It's not all just single family or multifamily or commercial or all development. It's a mix. And that diversification is cool. Pro number five, returns. Obviously, historical returns do not predict future returns, but at least compared to various publicly traded real estate / REIT ETFs in the period that we looked at in this video, Fundrise outperformed those publicly traded real estate fund options. But of course, the past does not predict the future. All right, now to cons. Con number one, your investment in Fundrise is not liquid. I went over this in more detail previously in the video, but please keep in mind that when you invest in Fundrise, you're basically locking up your money for a while, right? And it can be tough to get it out before 5 years, and you may even have to pay a penalty if you intend to do so. Con number two, while the fees are not high by any means, they're still higher than the fees you would pay with a low-cost passive index fund or index fund ETF. And finally, con number three, I almost hesitated to put this one in, but I did it anyway. Fundrise can be a shiny object. If you've seen my Millionaire Math webinar, go to loganalec.com if you haven't, but if you've seen my Millionaire Math webinar, you know that investing in the stock market in a very boring fashion can make you a millionaire, right? So do you really need to be in a relatively illiquid asset like a Fundrise eREIT? That's for you to decide. That's for you to decide. And if you do decide, though, that you'd like to learn more about Fundrise, consider using my link in the description below. It's no cost. There's no fee to it. It's not anything different to you, but the channel does get a commission. All right, folks, that is my Fundrise review. Thank you so much for watching it. Please be sure to watch my other reviews of investment platforms on the screen that follows, and I will see you over in those videos. Bye-bye.